Hi everyone, welcome to a brand new episode on markets. Today we're looking at Amazon, ticker symbol AMZN. We'll cover the income statement, balance sheet, cash flow, key figures, our key feature, and the technical aspect of the stock. Should we be buying Amazon right now? Let's find out. As I mentioned, we're looking at Amazon, ticker symbol AMZN, and they are traded on NASDAQ and are in the trade and service sector. If we go down to the screen, we can see that their market capitalization is at $1.5 trillion and the revenue is at $469 billion. The PE ratio coming in at 47. Now, guys, I like companies with a PE ratio of 20 or below. So having 47, that is just way too high for me. So that is a no from me. Now, when you see a stock with a high PE ratio, that tells you that the market expectation of that stock is high, and therefore there are a good chance that you might see capital gains on those stocks. But the overhanging risk here is that if the company doesn't meet those expectations, we will see the stock price fall. Same thing goes when you see a stock with a low PE ratio, that tells you that the market expectation of that stock is low, and therefore you might not see capital gains on those stocks. So just keep that in mind. Profit margin coming in at 7%. I like companies with a profit margin of 15% or higher. So having 7%, that is just too low for me. So that is a no. Now, price to sales ratio coming in at 3.3. I like companies with a price to sales ratio of maximum 4. So seeing that they have a price to sales ratio of 3.3, I like it. So that is within my range. Now, price to book value coming in at 11.7. I like companies with a price to book value of maximum 3. So 11.7 is just too high for me. So that is a no. Now, if we were to summarize, the PE ratio is too high, price to sales ratio within my range, and price to book value is too high. So this tells me that the companies at its current state is overvalued. Now, they don't pay out any dividend, which is a shame because I like those recurrent income. And return on equity coming in at 28%, I like it. So that is a go for me. Now, when you see return on equity, basically tells you that about a company's ability to create return. It is very critical when you have a company that doesn't pay out any dividend. You want to make sure that you have a company that is able to create a return on the capital you're about to invest in them. So seeing that they are coming in at 28.8%, I like that. Now, return on assets is coming in at 4%, a bit low. So this is a no for me. Now, the stock is currently traded at $3,130. If we go down to the moving average, we can see that we are below the 50-day moving average, but also below the 200-day moving average. This indicator is telling us that we might see the stock price decline. If we take a quick glance at the chart, we can see that we have been moving in a positive trend channel for quite some time, but have lately broke down below the channel. But we'll take a closer look at the technical aspect of the stock further down. But let's jump over to the income statement. And what we're interested here is that the total revenue, we can see we went from $177 billion in 2017 up to $468 billion in 2021. And the numbers have been improving every year. I like it. So that is a plus. Gross profit went from $51.2 billion up to $126.9 billion. And the same thing, the numbers have been improving every year. I like that. So that is a plus. Net income went from $3 billion up to $33.4 billion. The same thing here, same trend, positive development. I like that. Now let's jump over to the balance sheet. What we are interested in here is that the current assets versus the current liabilities, and we can see that there is a huge difference between the current assets and the current liabilities, basically telling you that if the company were to convert the current assets to cash, they are able to pay off their current liabilities and still have capital left on the table. So that is a plus. I like it. Now, they are far from being able to pay off their total liabilities, which is negative, but there is not a lot of company that is in that position to pay off their total liabilities. If we look at the total liabilities, we can see we went from $103.6 billion up to $282 billion, and the number have been growing steadily every year. That is minus. I would like to see them start reducing the total liabilities and also reduce the rate which the total liabilities are moving. If we jump over to the outstanding shares, we can see that we went from 484 million shares up to 5 509 million shares, and the number have grown every year. That is a negative. Basically what's happening here is that the company is issuing shares, and that tells you that there are more and more available shares, meaning that your share of the company is decreasing. Your share of the company is being diluted. When you see that the numbers are falling, that means that the company are doing buybacks, meaning that there are fewer and fewer available shares, meaning that your share of the company is growing. And there is a lot of investors that either skip this part or doesn't know about it, because they've been looking at a company's balance sheet and they see a company have a lot of assets and the debt is not growing that much, which is plus, which is great. But on the other hand, we can see that the company issuing more and more shares, and that is negative. Basically what happens here is that that's a way for a company to bring in more capital without taking on more debt. So seeing that the number of outstanding shares are growing, that is a negative, that is a minus. Now let's jump over to the cash flow, and what we're interested here is that operating cash flow and the capital expenditure. And we can see that we in 2021 operating cash flow landed at $46.3 billion, and capital expenditure at $61.1 billion, and the operating cash flow went from $18.4 billion and have been growing every year, and that is a plus. That is great. Capital expenditure went from 12 billion up to 61 billion. Also, the numbers have been improving every year, and a huge difference between 2020 and 21. Basically, they are investing in the business, which is a plus. I like it. Now let's jump over to the key figures. And what we can see here is that the earnings per share went from $6 per share up to $65.5 per share, and the numbers have been improving every year. That is a plus. I like it. Revenue per share went from $366 per share up to $919 per share, and the number have been improving every year. I like it. Equity per share went from $57 per share up to $271 per share, and also the numbers have been improving every year. That is a plus. It's a shame that they don't pay out any dividends, because I like those recurrent income. Gross margin went from 28.9% percent up down to 27%, and also we can see here that the number have been falling, and then for the last 2 years have been improving, but the overall trend is negative. This is a minus, but it's not a lot of fluctuation, but still I would like to see an improvement in the gross margin. We can see that the cost of goods sold have been growing, and this tells you that in 2021 a gross margin of 27%. That means that for every dollar they sell something for, they get to keep 27 cents on that dollar and still have their operating costs to pay. So I would like to see them improve these numbers, and we also need to compare this number across the industry and see how does Amazon do compared to their competitors. So this is a negative. Operating margin went from 2% up to 8%, and the numbers have been improving every year. I like it. So that is a plus. Profit margin went from 1.7% up to 7%, and numbers have been growing. We fell off 1 year, but overall trend is positive. I like that. Return on equity, as I mentioned, tells you about a company's ability to create return on their equity, meaning that their ability to create a return on the capital you're about to invest in them. And we can see we went from 10.9% up to 24%, and the numbers have been improving. We fell off 1 year, but overall trend have been positive. That is great. Return on assets went from 2.3% up to 7.9%, and the numbers have been growing. Fell off 1 year, but overall trend is positive. I like that. Solidity went from 21% up to 32.8%, and the numbers have been growing every year. I like it. Basically, solidity tells you about a company's financial strength for the long term. Balance sheet went from 1 up to 1.1, and the number have been improving every year. We fell off the last year, but overall trend is positive. I like that. Balance sheet liquidity, same thing as solidity, but here it looks at a company's financial strength for the short term. Debt ratio went from 3.7 down to 2, and the numbers have been falling every year. I like it. So basically, debt ratio in 2021 at 2, basically meaning that the company had 2 times more debt than equity in the business, and seeing that the numbers are decreasing every year, that is a plus. I like it. Now guys, we have gone through the income statement, the balance sheet, the cash flow, the key figures, and now over to our key features, which is the stock analyzer. And what the stock analyzer is, that it gives you a simplified, holistic overview of the company's performance. If you want to dig through the numbers, you can dig through the numbers or have the software do the heavy lifting for you. If we take a look at the screen, we can see that the PE ratio is above 20, which is negative. They don't pay out any dividend, which is negative, and the number of outstanding shares have increased, which is negative. Revenue increased over the past 5 years, positive. Profit margin below 15% and negative, and profit increased over the past 5 years, positive. Current assets is greater than current liabilities, positive. Solidity increased over the past 5 years, positive. Balance sheet liquidity increased over the past 5 years, positive. And debt equity ratio decreased over the past 5 years, positive. And the total liabilities have grown for the past 5 years, negative. Guys, as you can tell, it gives you a simplified, holistic overview of the company's performance. It saves you a lot of time. If you want to dig through the numbers, you can dig through the numbers or have the software do the heavy lifting for you. You can have the software along with everything we've gone through, plus access to our discussion forum where you'll be able to chat with me along with other members for only $10 per month. So make sure to jump over to commerce.sc and become a member today. Okay? Thank you. Now let's jump over to the technical aspect of the stock. So here we have the chart. Let me just lay down the support line, something like that, and let me change that color to green, and also let me do something like this, as we can tell, and let me do one more for a resistance line, something like that, and let me change the color to red. And you can see, guys, that we have been moving within a positive trend line and have since March 2020 seen a rapid price increase, and have since then seen a move within a positive trend channel. And lately we broke below that trend channel and then did a retest, but we never broke back to the support trend channel, and now the price is going down a bit, and we can see that these support line have held before, indicating that this is a strong support line, now a resistance level. I don't think we will see something like this, that the price will move below this line here. If that happened, this would be an amazing opportunity to enter the stock. But I think we will see something like this, a ascending triangle forming, and then seeing the price move within that triangle and then go back within the channel. That's what I think we'll see going forward. And the main reason is that this is a large and stable company with a lot of positive thing going on. For instance, return on equity is at 28%, which is great. The revenue and the profits have increased over the past 5 years. The operating cash flow and the capital expenditure are in a positive trend. The current assets is greater than the current liabilities. Solidity have improved over the past 5 years, and the balance sheet liquidity and the debt equity ratio are improving, which is great. The only challenges I see is that the company is overvalued with a high PE ratio and a high price to book value. It's a shame they don't pay out any dividend, because I think that would attract a lot of investors. Another thing that I don't like is that the number of outstanding shares are growing. It's not growing with much, but they are still issuing shares. The low return on assets is a bit low, and the profit margin is a bit low. I would like to see a higher number. And the moving average indicates that we might see the stock price go down a bit, but I don't think we'll go below this area here. I think we'll see a ascending triangle form. So it's a great opportunity to buy the stock and just earn some capital gains on this stock. So that's how I would trade the stock. How would you trade the stock? Please let me know in the comment section below, and also what stocks you would like me to take a look at. If you have enjoyed this episode, please give me a thumbs up, comment, subscribe. Until next time, guys, take care. Bye bye.